Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 30th of December 2020. Alright everyone, let's get into the news from today. So I guess the biggest kind of thing that happened in Ethereum today was this new, algorithmic quote-unquote stablecoin launch called Mithril Cash. Now this kind of got a lot of attention because they reached, I think it was 1 billion TVL. Yeah, you can see here 1 billion TVL within a few hours, which is quite crazy actually. And the reason this happened was basically, I'll explain what this is. It's basically a new, as they describe it, algorithmic stablecoin that is being dispersed via a liquidity mining program that lasts for 5 days. And in order to, earn these tokens, you can put a bunch of DeFi tokens in. You can stake a bunch of different DeFi tokens. You can stake stable coins and things like that. And this, that's why the TVL went up so fast, is because they basically tapped into all these different communities and all these different holders of different tokens, and basically said, here's a risk-free staking kind of staking mechanism to earn tokens that were worth some amount of money, and you can just basically farm and sell these tokens off. Now, when I say risk-free, I don't mean that there's no smart contract bugs, right? And there's no other risks associated with it. What I mean is that usually a lot of these farms have ways to farm their token with Uniswap or SushiSwap liquidity provider tokens, which are a lot more, risky because they come with impermanent loss risk, right? Because if you're providing liquidity, you're taking on this kind of impermanent loss risk where if the market moves against you, you can lose money like that. So that's why you'll see a lot of these other farms not getting, as much TVL, nowhere near as much TVL as this. Whereas with Mithril Cash or MithCash, whatever they're calling it, you can basically just deposit your Wi-Fi tokens or your Arbit tokens or your Link tokens into their smart contract, and that's it, right? You're just depositing them there, and then you can earn these kind of MIC tokens. So that's what a lot of people did. It reminded me a lot of YAM and Wi-Fi because that's how those tokens were dispersed. It actually reminded me a lot of those experiments. And I didn't kind of participate in this one because I didn't trust the contracts or anything like that. I saw some people saying that the contracts were fine, they were safe and everything. But, I'm kind of over it as well. I did a lot of this stuff during DeFi summer, and I'm kind of totally over it at this point where I'm I've done this, I know what it is, maybe I'm missing out on some money, whatever. It's just, I don't think it's something that, a lot of people, I guess, that I usually speak to and that participated in during DeFi summer actually participated in. Even though this reached so much TVL, I think what happened was a bunch of whales came in, really, really big whales, and kind of I saw people complaining that their gains were going down because whales were coming into this farm with a lot of capital and their kind of rewards were going down. So there's that aspect to it as well. But yeah, at this point, these things are not stable coins. Mithril Cash is a fork of Basis Cash, which is based on the original Basis project, which is, quote unquote, an algorithmic stablecoin, which is trying to, they're trying to be stable coins, I guess, but it's just, I don't see how it's going to work. And I kind of went into a little bit more detail in today's Daily Gwei newsletter about these things. I call them money games more than kind of, algorithmic stable coins, things like empty set dollar, dynamic set dollar, Mithril Cash, Basis Cash, Debase. There's a bunch of these things now. They're basically, excuse me, they're basically money games rather than, anything resembling a stable coin, because they're never stable pretty much. Maybe they'll be stable for a few hours or something like that, but the mechanisms that they run off basically reward people for the token not ever being stable, because when it's above a certain price, people can profit a certain way. When it's below a certain price, they can profit another way, and that certain price obviously being $1 because they're trying to be a stable coin. So I'm not an expert on these things. I'm not going to claim to know that they're never going to work, but I've seen a lot of smart people kind of talk about this, and they're basically saying, this stuff just doesn't fundamentally work. It doesn't matter how many parameters you tweak, how many different experiments you try, it's just never going to work. Now, just because someone says it's never going to work doesn't mean we should take their opinion on face value and not try these things. I'm all for trying these experiments. That's what Ethereum is for. A lot of the time, basically trying a lot of things, trying experiments, seeing what sticks, seeing what works. But I really wish these projects would stop actually advertising themselves as stablecoins, because they're not. And maybe one day, if it works and they become a stablecoin, then they can do that. But, it's kind of deceiving and misleading at this point, I think. And, Mithril Cash isn't the only kind of culprit here. Pretty much all of them do this. Some of them are serious projects that actually want to be, a stablecoin if they can, through this algorithmic kind of feature set that they've got going on here, or like mechanism, I guess you could call it. But yeah, so this was quite big today. If you are in it, and you definitely should know what you're doing. You definitely should know the risks associated with it. The number one kind of thing that I think people should be aware of is definitely that it's just not a stablecoin, and it's not going to be, if these things ever become stablecoins, they have to grow to such a large size where no kind of like whale can move the market. Because at the moment on these smaller ones, whales can very easily move the market on these things. So I think, we're very, very, very far away from that ever becoming a reality. And if it does, at that point in time, these things aren't even going to be interesting anymore for most people, because the only reason that they're interesting, in my eyes, to the majority of people, is that they can speculate on it and they can make money on it. If you can't speculate on it, if it's stable, if it never goes, more than maybe a tiny amount above or below peg, then people aren't interested in speculating on it. If it actually is a stable coin. So that's my kind of reasoning as to why I think these things can never be stable, is because once they are, they're boring and they can't grow anymore, and they kind of like, it breaks a lot of the incentives around it. But maybe there are ways around that, and I think there are. I think projects like Empty Set Dollar are having a really good go at this. I know a few people involved with that, and they're having a very good go at this, trying to actually make it work. Now, people will make money, people will lose money, like every experiment on Ethereum. And I just think that if you're playing in this, you should be aware of that for sure. So yeah, just wanted to put that out there. If you want to read more about that, it's in the Daily Gwei newsletter. And there's tons of people talking about this on Twitter. I'm sure you've seen that as well. And I think there's actually a blog post on Deribit Insights, if you want to go search for that, that explains algorithmic stablecoins and the other stablecoins and kind of how they differ and how they all work. So I recommend going to check that out as well. Opyn V2 went live today. So I was discussing yesterday about how I thought, or how I think and I know that options are going to be a big kind of thing in 2021 on Ethereum. We had Primitive Finance go live yesterday. We have Opyn going live today. And basically, Opyn's been live for a few months now, but this is their V2, which comes with a lot of different upgrades. So if you scroll through here, you can see they give a bit of background here. They give a kind of like update on what's new with V2. So they have what's called their Gamma protocol, which they're claiming is the most powerful, capital efficient DeFi options protocol, and an updated interface for trading options using their Gamma protocol. There's a bunch of different improvements as well, such as margin improvements, call options without multipliers, European cash settled options as well, which is pretty cool. You can earn yield on and governance tokens on your collateral. There's a bunch of things here, like flash mints. There's so many features here. This is really, really cool to see that they basically got this delivered, a day or so before the end of the year. So, and I think I said yesterday, I'm counting these things as like 2021. Like, even though they're happening in 2020, I still think they fall into like the 2021 narrative of options and derivatives and stuff coming to the Ethereum mainnet. But yeah, I recommend going and checking this out. I'll link this in the YouTube description. You can check out the blog post, go play around with it yourself, learn about what they're offering here. It's really cool because they've actually got options on the DeFi Pulse Index, which I thought was really fun, where you could speculate on where you thought the DeFi Pulse Index would be at any particular point in time, which was the first option on a DeFi index. So that was cool to see. But yeah, really interesting. Go check this out if you haven't already. All right, so I just spoke about like the money games and the algorithmic stable coins, and the rebasing coins fall into that kind of arena as well. And I think back in DeFi summer we had Ampleforth as one of the most popular one of these kind of like, I guess, as I said, they're not really stable coins, but like as these money games on Ethereum. And then Yam Finance came out as well, and that was another very popular one. So it's kind of a little bit ironic that yesterday Yam disabled their rebasing. So the YAM token no longer rebases. It's not trying to target $1. If I think it's around $1 right now, but if, more people buy it than are selling it like a normal token, it'll go up in price and vice versa. So yeah, this is pretty big. I think this is the first one that has actually removed the rebasing. And I think this was done because it wasn't actually adding any value to the protocol anymore. It wasn't like for I think like, I guess months now, the rebasing was actually a hindrance to the growth of the protocol. No one wanted to buy it because everyone was burnt by the rebasing mechanism, right? And it just wasn't a fun game anymore, and speculators weren't in it anymore. So it was serving no purpose. So, and YAM has evolved past being basically a pure play, kind of like, let's use rebasing to grow a treasury and we'll do stuff with that treasury. They've moved on to different things now. They have the Umbrella protocol coming out, and I spoke about, degenerative finance the other day. They're actually making a set to manage their YAM treasury as well. So they're going to be investing that and doing different things with that, which I thought was very cool. So yeah, I think this is a great move for YAM. I think the community is very happy with this. I'm personally very happy with this because I actually ended up buying some YAM the other day. So just a disclaimer there, because I saw that the vote to remove rebasing had gone through. So I was like, okay, I didn't want to buy it before because I really didn't want to speculate and buy these rebasing tokens because they're just so risky, and I hate them, honestly. I really do. They just feel really crappy because you never know when it's going to go into an expansionary phase or a positive rebase phase where it'll, positively rebase and you'll earn money, or go into like one of these death spirals where it goes the other way and it negatively rebases. So I hate that. And it's a bit of a headache from an accounting perspective as well. So that's why I kind of wasn't involved then. But yeah, I saw it kind of, the vote went through and I was like, okay, I'm comfortable, putting a little bit of money into this because I want to support YAM, be exposed to their growth because I actually think it's a really great project. So yeah, just the disclaimer there. I know I talk about YAM a lot, but I only bought the token, very recently. So I've been following the project anyway since kind of launch. I think I was one of the biggest supporters of YAM at launch. I think I respect the people working on it. I think their original vision that they're still executing on is really great. So definitely good to see them remove the rebasing here. Redphone Crypto on Twitter today put out a really great thread. And before I get into his thread, actually, this is one of my most favorite recent follows, Redphone Crypto. I try to not follow too many people on Twitter because I really want to make sure that I'm across the people that are putting out like really great content so that I can obviously bring it to you guys on the Daily Gwei Refuel, and that so my feed isn't just clogged all the time, of course. But, in this thread, he basically says that one of his biggest conceptual shifts for 2020 was fully accepting that Ethereum is going to be a global settlement layer, and Ethereum is becoming the deepest, most liquid market of any asset for any asset of any form of value. And now this was interesting to me because this is exactly how I think about Ethereum. I've written about it in the Daily Gwei before. I basically call Ethereum this economic nexus where lots of value will flow in and out of Ethereum. It doesn't necessarily have to live on Ethereum, but Ethereum will be that home for that value. It'll be where all this sort of high value, high security stuff needs to happen. It'll be where all the assets live. I mean, you saw this recently with Compound Chain. So the Compound is launching Compound Chain, but they're keeping the comp token on Ethereum. They're not putting it on Compound Chain. And there's many reasons for this, right? Ethereum has all the liquidity, it has all the composability, all the standards, it has a bunch of benefits for kind of having these assets there. So, and Ethereum has the most security. So being a global settlement layer is exactly what it can be. And it's now processing more value than Bitcoin. So I think, I mean, and what I mean by economic nexus as well is that you can imagine the nexus being the middle and Ethereum's there. And then around Ethereum, you have basically, layer 2, you have side chains, you have new blockchains or other blockchains, you have centralized solutions, but they all feed into Ethereum. They all go in and out, and Ethereum's like the home, the nexus, right? So that's kind of got me thinking, when Redphone put out this thread about that. And he goes on to say, for him, the most obvious example is Bitcoin trading on Ethereum. That was phase 1. And now we're seeing basically every blockchain project in the world create a bridge to Ethereum. And that's what we're seeing. We're also seeing all these tokens trying to get on Ethereum in a wrapped form. So there was wrapped Bitcoin. There's going to be wrapped Zcash. I think they wanted to do wrapped Tezos. I think wrapped XRP was on cards for a while until recently. So there was a bunch of those things going on and still going on. And that's simply because Ethereum is not only an economic nexus, but it's a liquidity vortex. And what I mean by that is that it actually sucks in liquidity from anywhere that it can get it, and it keeps it, because liquidity begets liquidity. The more that you have, right, the more people want to be involved, because they're like, okay, well, the liquidity's there, I'm going to bring my assets there and I'm going to do things with it. And that just compounds and compounds and compounds. And this is what we mean by network effects as well. It's not just liquidity, it's network effects of Ethereum across like everything, right? The more, money Legos we build, the more people build on Ethereum, the more people build new money Legos, and that just compounds. Same with the more developers on Ethereum, the more people working with the Solidity programming language, the more developers come, because it's easier for them to get started on Ethereum than another chain. So it kind of speaks to all that as well. So yeah, I think this is a really great thread. I'll link it. I mean, I shielded my blog post here, so you can go check that out there as well. But I'll link this thread in the YouTube description, and you can go check it out for yourself. All right, so it's that time of the year where everyone's giving their 2021 predictions, I think. So yesterday I talked about Kane's 2021 predictions. Today we have a thread. We have two threads. I'll go through the other one in a sec, but we have one from DCInvestor, who is a longtime Ethereum community member / mega ETH bull. I think he's as bullish as me on ETH. Thinks it's going to 10K as well, I think. But anyway, so his 5 predictions were laid out in this Twitter thread, and basically number 1 is that he believes institutions are coming and many will start to buy ETH. And the reasoning for this is that liquidity, CME futures basically state that Ether is not a security, reflexivity as number 2, narrative of all apps being built on it, many existing fiat on-ramps, and flailing competitors. So this is why he thinks institutions are going to buy ETH. But obviously they're buying Bitcoin, but they're going to buy ETH next. And there's literally no number 3, right? I mean, you could have made the argument that XRP was number 3 until recently, simply because they were already selling to institutions. But outside of that, I don't know if institutions are going to be buying, LTC in droves or Bitcoin Cash or any of this sort of stuff. And one of the biggest things for institutions is if they're buying something that's a security or not. In these markets sort of thing. So I think that plays a big part again. His second prediction is that he believes that DeFi use will explode again, starting with a big surge in Q1 and again in late Q3. He believes the emphasis will shift from food tokens to synthetic assets, financial contracts, and collateralized lending. This will be fused by centralized exchanges pooling customer funds to allow for small participants. Now, I totally agree with this. I spoke about this. I don't know if I spoke about it yesterday. I think I've spoken about it before, where I believe that centralized players are going to tap into DeFi liquidity and offer it to their customers. And I think that is going to be what a lot of people kind of default to. And that's going to help DeFi grow across the board. We've already seen players doing this, like tons of players doing this, so we're going to see more and more of that and more money pour into DeFi because of that. His third prediction is that Layer 2 will take the mainnet by storm, heating up in earnest during Q3. The Layer 2 will be based on rollup technologies and will help Ethereum not only scale to more users, but also create far better UX and allow for new services altogether. Totally agree with that. I mean, 100%. I spoke about this yesterday. We're going to see a lot of adoption of Layer 2 in 2021. We're going to see Uniswap v3 go live, which I think is going to go live with the Layer 2 implementation. Synthetics is hard at work on their own. There's a bunch of other teams working on theirs, like DYDX as well. There's so many teams working on it, so that's definitely going to be a big thing in 2021. His fourth prediction is that ETH will establish its brand as a programmable store of value reinforced by DeFi deposits and staking in ETH2. This will propel ETH on its inevitable journey to become the world's first programmable macro asset, and over 5 to 10 years, the implications will be staggering. Totally agree there, right? This is like the ETH mega bull thesis right here, that you believe that ETH will not only be a store of value, it will not only be some form of I'm not going to call it digital gold because I think that's too limiting, but some form of a store of value. It will be programmable, and it'll be the first programmable, natively programmable on Ethereum store of value in history. Fully decentralized, fully self-custodial, natively programmable, and be incredibly valuable because of that. And I truly believe that as well. We spoke about this a lot, like DCInvestor, Eric Connor and I, on Bankless's episode recently. So if you go to Bankless on YouTube, you'll be able to find that episode of us talking more about that. And DC Investor's last prediction here is that ERP1559 will launch onto ETH1, introducing the world to what could be a truly deflationary ETH, which just reinforces ETH as a store of value, ending discussions around ETH's endless supply, quote unquote, and start them around why proof of work hard caps are unworkable. I mean, I fully agree with this as well. I think that 1559 is the most bullish thing that can happen to Ethereum ever. Like, basically, sorry, not Ethereum, ETH the asset, because it unlocks that final pillar that we need to make ETH a net deflationary asset. And what do I mean by that? I mean that if there's enough transactions happening on the Ethereum mainnet and there are enough fees being paid during an ETH2 world where issuance is really low that is being paid to stakers, we could see ETH's annual issuance go negative. So so basically less than 0%. And this is obviously going to make ETH an incredibly scarce asset. If it gets to the point where we have so much activity on Ethereum, so many fees being paid, so much ETH being burnt, maybe sometime in, decades into the future, the ETH supply actually contracts so much that there's just barely any ETH for people to use. And, all the ETH is like locked up in different things, being used for different things. And this would cause, in theory, the price of ETH to skyrocket. And, maybe my $10,000 target for ETH is conservative in a world like that. Maybe it is. I actually do think it is if Ethereum and ETH achieves all of its goals. So yeah, that is really, really bullish there. And I mean, that's part of one of my main bull cases for ETH as an asset is that we get to that point where it's net deflationary and then the world won't even know what hit it, right? You can't beat that. Like a hard cap can't beat that. I don't think something like Bitcoin will ever put in fee burning because the community doesn't want to change the core protocol. And if it does, then I actually think that's really bullish if Bitcoin did that. So yeah, without going on too much of a tangent there, I fully agree with all of his predictions. He front ran me a little bit on some of them because I was going to make these predictions. Maybe I should stop being lazy, but I'll get mine out soon enough because I definitely want to make sure that I've got them out there so that in a year's time, if I'm right or wrong, I can look back on it and see what happened there. So another prediction thread from Hudson Jameson, and he focused less on DeFi and kind of like ETH as an asset and more on what Ethereum can do beyond DeFi, which I thought was interesting. So 2 examples he gave is decentralized car sharing and incentivized private WikiLeaks. So these are kind of typically referred to as the Web3 use cases of blockchains, in that I actually think Web3 is still a bit of a long ways away. I think obviously DeFi and financial use cases are going to come first, and Web3 will come a bit later, especially because Web3 requires a lot more scale for it to be effective. But basically, I honestly spend a lot more time on the DeFi side of things than I do on the Web3 side of things. So I'm not an expert here, but Hudson does spend more time here. So I actually trust his kind of predictions here on what we will be able to see. So he basically describes it here. I'm not gonna read through the whole thread because I won't do it a great service, but I'll link it in the YouTube description. But he basically describes like how these will work, and I actually wanted to focus on the private WikiLeaks because I thought that was the most interesting. So basically, what he posits that you could do is that you could divide the DApp into communities, such as US politics, New York government, major gaming industry, etc. And each community would have news outlets or even individuals who are looking for leaks specific to their community. Bounties could be set up and on-chain reputational systems built for both the leakers and the outlets receiving the leaks. Payments will be on-chain and NewsCypher would be used to privately share the data in a decentralized way. Leaks that are accepted can be ranked, and you can maybe even build in timestamping. So if an outlet leaks your secrets without paying you, you can prove that, and you can prove that you shared the data beforehand and shame them, which means their reputation would go down, of course. Secrets Market was a Gitcoin kernel project that tried some of these ideas in the kind of like kernel, but he can't find them anymore. And then he goes on to say his overall point is that DeFi can be great at times, but we need to not lose sight of the fact that there are use cases beyond finance for Ethereum, and it's only the beginning. I mean, I totally agree with that. And as I said, I think that I mean, Web3 will come later, financial use cases will come first, and that's simply because of scale a lot of the time. You can basically move unlimited amounts of value on Ethereum for the same fee as moving $10, right? So if you're moving $10 of ETH, or you're moving $1 million of ETH, it's going to cost you the same amount in fees to do so. Whereas with Web3, it doesn't scale like that because you can think of each kind of unit of value as being a one individual. So if you want to have 1 million individuals interacting with each other, obviously that's going to clog the whole network and it's just not going to be very cost effective. And the interactions are different too. You know, moving money around and you know, doing yield farming and things like that is worth it when you're paying those fees. But if you're trying to do things like, you know, maybe upvote a post or like give someone a review or do reputational scoring and things like that, it doesn't make sense from an economic perspective to pay like $10 in fees to do that. So I think we're going to need scaling before we can actually get to a world where these things take off. And as I said, I think scaling is coming in 2021, but I think it's coming for DeFi first. I actually would say that we'll probably see more of these Web3 things proliferate in probably 2022, but yeah, I don't see it happening anytime soon, unfortunately. Even though that I think they're really great use cases, the technology is just limited right now. Maybe they happen on other chains. Maybe they don't happen on Ethereum. And then, you know, Ethereum is still that economic nexus that kind of other, you know, chains plug into, but it just doesn't host these apps. But we'll see. You know, I think we can host these on layer 2 on Ethereum and still secure them with Ethereum. So we'll see what happens there. But yeah, great thread from Hudson here to highlight non-DeFi use cases. All right, that's it for today, everyone. So tomorrow there won't be a Daily Gwei Refuel as it is New Year's Eve for me. But I hope you all have a great New Year's. I'll be back on New Year's Day to share a Daily Gwei Refuel update for you all. So yeah, if you haven't subscribed to the YouTube channel, subscribe to it. Give the video a thumbs up. Subscribe to the Daily Gwei newsletter. Join the Discord channel as well. There's some good conversations going on in there at the moment, so I recommend that you join. And yeah, I'll see you all in the new year. Happy New Year, everyone. Thanks.